someone had a scenario. Freddie, was that maybe you? Did we have time to go into loan scenario?
Oh, yeah. I guess it's a loan scenario. Okay, guys. Here's where the senior LOs are probably going to win on this one. I have a potential buyer in, I would say, in the Hollywood area, North Hollywood area. They're thinking about buying another property. They already own one that's probably at 50% LTV with the killer rate. So they're not going to do anything with that property. But they have about 20% down to go into another property. They're looking into something around $1.3 million property, single family home. And they plan to occupy that property. So the proximity is close within the same city, husband and wife. Wife's a W-2, very well-established job. Husband is self-employed, and it fluctuates. The income fluctuates a lot. So he's concerned about, 2024 income not probably not being where he wants to be, but they do have enough down payment to go with 20% down, but it's a mixed income household. So we're trying to figure out what the best way would be to help them get into that new property, obviously at a decent rate. And we don't know whether to buy it as an investment property or moving into the new property. What would you guys do with that scenario?
Anyone want to take a chance?
Freddie, a few more particulars though. What's the purchase price?
1.3 million. It's the new home, around 1.3 million. So they have 20% down. And like I said, they already own the property in the same city. W-2 business owner. I would say self-employed mixed household. So I've checked with a couple lenders, and they're like, if you wanted to go P&L, you have to go P&L only. You can mix W-2 with P&L. If you go bank statements, you have to go bank statements only. So I don't know. I wanted to get some feedback before I talk to all the lenders myself.
Well, first of all, the self-employed borrower, is that the husband?
Husband, yeah.
How long has he been operating that business?
That's his whole life. He's a personal trainer.
Okay, gotcha. And I'm sorry, if I understood this correctly, is his concern that his most recent, so the 2024 tax returns are low?
Right. So we're concerned that his income won't help as much. Obviously, we have the W-2, but she wouldn't qualify on her own.
Okay. So at this point, it does seem like conventional is out of the picture, and you have to go with a non-QM product.
Well, I think so. I haven't seen the financials, but from my initial conversation, so I'm trying to win this deal. The agent is a very prominent agent in Hollywood, and he has a lender. But the trainer, it's somebody I used to work with back in my early 20s when I was fit. And so he reached out to me because he's seen my Instagram, and he's like, I want to give you a shot on this. My agent has a lender, but I want to see if you can do something, with this.
Gotcha.
Obviously, I assume the reason why he's reaching out is because he has certain concerns about his own income and how they can put the whole deal together. So maybe this is our time to shine here.
So I'll just at least I'll give everyone else a shot, but I want to address one thing though, is regarding the mixed use of income. If you have a borrower that's W-2 and another one that's self-employed, whether you go with bank statement or P&L, most lenders will qualify both incomes.
Okay.
Yeah. Now, the program will preside over the most with the highest risk. So if you have a wife that's W-2'd and you have to go with, and the husband is self-employed, and you're going to go with a bank statement program or a P&L program, you can still qualify the wife's income, but it's going to be under the P&L or the bank statement program. Does that make sense?
Got it.
Yeah.
So we can have we can go with the P&L program and consider the husband's income under that program, and then add on the W-2 income from the wife.
Correct. And I could be wrong, but just
I mean,
about every lender
that's
allows
what I
it.
understand. That's what I, initially that's what I thought.
Yeah.
I only placed a couple phone calls yesterday. And the feedback I was getting is like, oh, if you're going to go P&L, it has to be P&L. If you're going to go bank statement, it has to be bank statement. And I was like, well, that's kind of punishing, like, if, we have
it could have been a misunderstanding and how it was, the information was relayed, but no, it's most programs do allow W-2 wages along with to be qualified along with in addition to the P&L, the bank statement.
got it.
So, anyone else?
Good FICOs, by the way. It's above 700. So we have good credit, good ownership history, good employment history for her on the W-2 side, and he's been self-employed for years. We're just worried about maybe the last year that's lower than usual.
I see.
So, my perception is one of these two. Do we must use the W-2 income to qualify, or can we just use the P&L to qualify and make it easier? It's because when we hire the bank statement loan underwriter or P&L loan underwriters, they're not trained to review W-2 incomes. So when you talk to UWM, Rocket, Archome, or Carrington, these non-QM underwriters don't know how to review W-2 income. They're not trained. Therefore, the underwriting guideline is different than NMSI or New Wave or JMAC.
But that makes sense.
Yeah, New Wave on NMSIs are trained to review the W-2s and transcript in the very beginning. That's how I was trained in the first 3 months. And I was given an option to go to QM loan underwriter or non-QM loan underwriter. However, the non-QM guys, especially a Home Express mortgage, that's one of the strongest non-QM investor that we have. The underwriter is not competent to review the W-2 income. So my recommendation is to give up the W-2, have the husband become the primary loan applicant, just the P&L, and then have the title ownership shared so that we can get it done in 2 weeks. My question is not about the loan amount or the program. My primary concern actually is focused on the number of reserves. Because when the loan amount is up under $1 million, we don't need the reserve for the P&L loan. However, when the loan amount, with given situation, it's at 1.04 million. If this person can have $40,000 more for the down payment, we don't need the reserve. We can get it done at 76.7% LTV. However, if we must do the full 80% LTV, par rate that I see right now is at 6.625. And the reserve requirement we have is 6,659 times 6. We need $39,000. If you go for NMSI, the worst pricing lender, that's 4 months reserve, $26,636. So question, I'm not putting too much emphasis on the income because we can go for P&L anytime. But amount of asset that they have, knowing that they have an existing home, is going to be very, very thin because down payment, reserve, and the closing cost all must be ready to go.
I'll find out soon because one thing I do with new buyers is I just use this practice from commercial. I have them fill out a personal financial statement to see where the money is, so that I know and I have a full picture of what I'm dealing with. And then we'll see if they have enough after the 20% down. So would you structure it as an owner new purchase or as an investor?
Where is the physical location of business? Or registered?
I would have to look at the details. I think what he was doing before. Well, the wife has a regular job, but he built a home, like a home gym, at the current home that they have, and he's a personal trainer, so he trains like high-end clients. And so in the past, they were using like private gyms because that's their model. They train in private facilities, but then I think it was more profitable for him to just build something, and then now he's going to relocate that.
So before we dive in furthermore, is the home gym his primary location of commercial business?
No, it's in a residential property. It's their home.
Their home. Okay.
Yeah.
Second, does he have any entity or Schedule C?
I'll find out. This was very like fresh yesterday. I had a combo with them. I requested all financials just to see what's on hand, and then we'll figure out the next steps.
Okay. With Schedule C only, we can go to P&L option as well. We don't need to have LLC or corporation.
I would assume that because I asked if they filed jointly. He said yeah, so I'm assuming that then he would have told me, oh, I have separate business returns for my corporation or something. So I'm assuming it's a Schedule C on the 1040.
I'm assuming the investment idea came up because the other mortgage broker couldn't qualify and validate the ability to repay the debt to income option.
I don't know what they talked about, but I'm assuming that they're looking for options because they probably bump into a roadblock and if we have a solution, I think it can be a win.
I think it's early to talk about winning. We can win all the time, but how we win and how much you're going to make is what we should focus on. So let us know when the full sets are ready. Maybe we can set up a time later this week and dive further more.
Yeah, I'm planning on following up today to get the documentation I requested. I want to see if they've already picked the property, so maybe I can get an address, get an idea of the new property, and see what's on black and white, so we can go from there.
Okay, good.
All right, thank you, guys.
All right. Well, I guess I kind of went over time, but thank you, Freddie, Harrison. Big thank you to you, guys. It's just a fact, right? I mean, I preach this to myself too. I mean, me and C have been creating videos and stuff, but the more visibility you have, the better the chances. So whether that's through marketing material online or showing your face or a combination of, the more you do, the better. So get with Harrison, guys. Ramp up on that. We look forward to many more successes next week. Actually, if we don't mind, for those who are currently have been using Harrison's the material, and those who will be implementing it shortly within the next week or 2 or 3, we love to hear some more success stories entailing the marketing material. That'd be great. But if you have other questions, we're always available.
I have one last one for you guys. I have one last one. It's going to be short, or maybe not. But I'm one of those that's going to actually start utilizing this a lot more. But I have a question. So have you all made like a separate page, especially on Instagram or any other platforms, for your lending business, or you went straight and converted your personal account and started adding content to your personal account?
Yeah. Freddie, just to make that answer quick, everyone's going to have their own opinion. Okay. And I think there's no right or wrong answer. I personally know, I know Min. Do you know Min? What's a mortgage guy? I personally know him, and he's told me the same exact thing. He has a What's a Mortgage page about Min, and then he has his own personal page. And I think everyone here is going to have an opinion. One person is going to say use your personal. Another person is going to say start your business. I think the correct answer is try both, right? Because there are people on Instagram that are successful either way, right? And so I think it's a matter of how you are marketing yourself and how you want yourself, how comfortable you are, right? Some people don't like mix matching their having their business platform shown immediately to their loved ones in their direct contacts, right? Some people just don't like that. Some people are okay with that. So I think a lot of it is your own personal tolerance, as I've gathered from a lot of people. And then it's but another token is it's the most direct way to market yourself, right? To expand, to let the algorithm show you right away, right? I mean, there's a whole breakdown. I'm sure Harrison can probably take you better into it, but I would say talk to some people that you know that are already doing Instagram. Perhaps your fellow lenders. I mean, Peter has one. I mean, Harrison obviously doing it. And talk to your fellow agents, right? I think you'll learn a lot of insight from them. That's where I get a lot of my information. And ultimately, for me, it was a matter of a personal preference where I just didn't want to mingle my personal and business. And that's what it came down to. Yeah.
Thank you.
All right. Anyone else want to chime in, or you want to guys cut here?
Get back into shape, Freddie. I think you got to show your pecs, man.
Thanks, Ian. Oh, Ian, I love you, man. I hope you're going to meet us sometime soon. All right, guys.
Good stuff.
Freddie, don't give up on yourself, man.
I know.
All right, you guys have a good week.
Shoulders.
See you
Thank you, guys. Have a good one.
Hey, thanks, Harrison. Thanks, everybody.
Mm.